All right. Now we're talking. Back to work tonight we go. Hope you guys had a fantastic day out there. Hope you made some money on that beautiful reversal. But it's time to get back to work tonight. Wednesday is behind us. We have a big Thursday trading session coming tomorrow. We got some beautiful moves today. And anytime we see big moves in one day, we expect to get some really nice trade setups coming for the following day. So a lot of trades on my radar for tomorrow. I'm going to cover all my favorite trades in the video here tonight. That way you have a game plan to make some money tomorrow. Before we jump in though and get the game going tonight, before we talk about all my favorite trades for Thursday, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy this stuff, do me a favor. Will you hit that like button? Give me a shout out. Give me a holler down in the comment section below. Thank you so much for tuning in, supporting the video here tonight. But enough of the intro, right? Thursday is not going to trade itself. Where are the best trades setting up for Thursday? Boy, we have just a wide array of trade setups we're tracking here for tomorrow. Got the S&P right now in a bearish trading range. I've got some beautiful bear traps. Bear traps are going to be a common theme on the video here tonight. I've got some beautiful bear traps on the S&P. I've also got some nice bull traps on the S&P as well. So really both sides on the S&P. We'll talk about this, of course, as we go deeper into the video here right now. Nasdaq makes this big move down today, right? We have a lot of support down here. I would love to pick some bottoms on this for a bear trap reversal, but we've got to be careful though on the Nasdaq. That's a lot of momentum. I think we can play both sides of this Nasdaq. I think we can easily grab some bottoms, grab some pullbacks. So I definitely we have both bear traps, right, and buyer failures on the radar for tomorrow. And then of course oil is still trying to rotate higher here. Talking about bear traps, I think some bear trap breakouts will be nice here for tomorrow. I think some bear trap reversals off this low. So like I said, I think bear traps will be a very common theme in the video tonight. Now, I'm going to go over each of these trades I'm talking about in more detail. Before we do that, though, let's all get on the same page real quickly. There is no major news on the schedule for tomorrow. Please don't let that jobless claims fool you. Everybody's waiting to hear from the FOMC. Everyone's waiting to hear from CPI next week. So we do have the jobless claims tomorrow morning, but probably not going to be a big market moving event. We're pretty much wide open until we get to the CPI report next Tuesday and the FOMC coming out, of course, next Wednesday afternoon. I do want to give you a heads up, though. There'll be no video newsletters next week. Next week is quad witching. I try to take some time off in the afternoons every few months. Quad witching, third week of March, third week of June, third week of September, and third week of December. So I hate to leave you guys hanging, but we'll take some time off in the afternoons and the evenings next week. So be aware of that. We'll come back after the Juneteenth holiday on June the 20th here on a Tuesday. All right, back to our charts though, because the money is made on the charts. You guys know this, right? The news is nice to know what it is, but the money is made on the charts. And guys, I'm going to go over each one of these charts here right now and talk about my favorite trades for tomorrow. If you like making money, I would definitely make sure you watch all the way to the end of this video, because every trade I talk about can be applied to your favorite market. So don't go clicking off after I'm done. The E-mini, the Nasdaq, and the crude oil tonight. Now, a couple things here. First of all, this is a tick chart. You'll notice in the upper left-hand corner, all of these charts are tick charts. And this is the 21 EMA. It's one of the most important indicators we use for all kinds of things every morning in our trade room. Now that you know more about what you're looking at, what's the most important factor that's going into the S&P right now? Let's take a glimpse at the 60-minute time frame. And I think that will give you a pretty good roadmap of where the best trades are going to be setting up here for tomorrow. We basically, in the 60-minute chart right now, we're basically a bull market into a trading range. Now, if you're taking my free trading course on our website, what do we always talk about when it comes to ranges? Ranges are magnets, right? So this area right here, this area becomes a magnet right now for the E-mini. It's a little bit different on the Nasdaq, which we'll cover here in a moment. Now, in the free trading course, what do we talk about? If we know this is bullish, we know we're in a range right now, what do? We go out and we find support levels, support levels, support levels. And the goal is ultimately, if we understand that ranges are magnets, the goal is ultimately to buy off those support levels and try to go back up into that trading range, right? So that really is where I feel, and we talked about bear traps, right, in the introduction. This is why I say bear traps. Now, I definitely do think there's going to be options for sellers on the way down, but we have to pick our spots wisely, shorten this thing. I really like the idea of getting that kind of fake out, breakout into a bear trap, back up into that trading range. Now, one more thing, if we don't get that pullback, a breakout, right? Breakout going higher. We always talk about this, right? We got to see some proof of that strong breakout. So be very careful buying it if we go higher. My favorite trade tomorrow and really the rest of the week here will be getting down into these areas, right? And buying off those support levels below that trading range. So now that you know what the big picture looks like, now that you kind of know the general idea of this, now let's go back to our tick chart. I use tick charts because tick charts make everything easier. Analysis is easier, entries are easier, everything is easier on tick charts. And of course, this is a 7,000 tick chart in front of you. What do we have right now? We have a bear market right now into a trading range. Now, we know that ranges act like magnets. So what do you think? Do you think it's possible right now for us to make a move going lower that might backfire for those sellers and wind up snapping back up into that trading range? We already know, right? We already know we're looking to be a buyer down here anyways. So I like the idea of a bear trap off of that low. Now, there are two specific entry patterns I'm going to talk about on this. Just give me a few more moments here to explain two ways to buy that bear trap. We're going to talk about that more here in a moment. One more thing I want to kind of keep in mind is if we go higher, remember, this is a bear market into a trading range. We talked about a bull range a moment ago on the 60-minute. What do we do in a bear move into a range? We find resistance, and we look to short, right, off resistance. This is why I said earlier, a bull trap, right? Basically a buyer, if you're taking my free trading course right now, this would be where you look for one of those buyer failure patterns, right? Try to get the buyers roped in. It's basically a bull trap, right, off of that high. And, we are overall bullish overall, so I definitely want to keep my eyes open for a break higher and then back up to what ultimately is the top of that trading range, right? Up around that, 42, 92 area as well. So I definitely have some breakouts going higher here as well. All right. So first, let's talk about the bear trap going lower. Okay, let's talk about that going lower. Once I'm done that, then we'll talk about the short off the high, and we'll talk about the breakout potentially, right? If the bears do get smoked and we do end up rolling higher, we'll talk about those. Remember, it doesn't pay very well to make predictions. So what we'll do is we'll go through some different scenarios. That way, no matter what happens tomorrow, you have a game plan to make money. Now, we have some pretty wide open space down here. All right, there's plenty of wide open space. You can see that on the 60-minute chart as well. There's a lot of wide open space down there. And of course, that means we may see a pretty aggressive breakout going lower. How would I sell it? How would I short a market? How would I short something, right, as it breaks down? What's the concern? The concern is I don't want to sell really low, right? So as we're going lower here, if you want to be shorting down here, you want to look for what is ultimately a trap setup, right? It's a similar pattern, but it's called a trap pattern, right? These are called bull traps. Now, look at how this pattern sets up. Okay, I teach this, I believe, on video number 6 in the free trading course, right? Watch how it sets up. Strong move down, shallow pullback, lower low in price, okay? The lower low is key, okay? And then that trap, right? Like back here, move lower, pull back, lower low, trap, right? So traps are going to be your bread and butter. Traps are where the money is made as we are making that move lower. Okay? So keep that in mind as we go lower. Now, once we get underneath this trading range, right? And again, it may be that bear trap on the way down, or it may simply just race right on down. Again, we may get that pop going higher. I'm going to talk about that in a moment as well. If we get the strong run down, this is a great place to be buying, right? It's a great place to be a buyer. But what's the problem? Momentum. Right? Momentum is really, really strong in this example. And so it can be very difficult to pick the bottom. Right? Picking bottoms is difficult in kind of a bearish move like this. Not to worry. This is where we can use what I call a failure pattern, right? Now, think about it. If we're very bearish going lower, but I want to be a buyer down here because of that bear trap I talked about earlier, the key is I need to give the sellers the benefit of the doubt and let them try a couple times so I can then use their stops as fuel. Okay, we call these failures. This is what we call a two-try failure, right? A two-try failure pattern. There are hundreds of examples of these, right, in that free trading course that I mentioned earlier, which reminds me, I know that most of you guys have taken our free classes. You've learned all the entry tactics. You've learned about ranges, acting like magnets. But if you're here for the first time today, watching for the first time, if you're one of the few folks who haven't taken that free class yet to learn all these entry tactics, I'll put a little link up there for you for our free trading course. Grab that link and learn that strategy, because the strategy I teach, that the roadmap you'll learn in that short video series will teach you a simple trick to know exactly where the best winning trades will be each day, and I'll make it easy for you to start making money consistently. You'll learn my 4 favorite entry patterns. If you're missing the best trades right now, the markets are way too good. If you're not making consistent money right now, grab that link up there. That roadmap will get you on the meat. It'll get you on the good trades each day, whether you trade within a trade room or you're trading on your own. All right. Also, too, don't forget, too, I'll put all the links tonight. Everything we talk about, I'll put the links down in the description of the YouTube video. Now, a heads up on this. Oftentimes, when we get these moves lower like this, oftentimes we'll go in, the bears will try once, bears try twice, and we'll get that bear trap, right? That bear trap. Now, remember, this range is a magnet, okay? As we get going higher here now, where's the target? The target, of course, is to go back up into that trading range, okay? Now, at this point, what you want to do is you want to go out, look left, find a trend line off the high, okay? See how I do that? Draw that channel off the low, and then go looking for, you guessed it, go looking for traps. Okay, this would be a great spot for a trap setup, right, coming off of that low. Okay, now you want to make sure you're getting in off that trap somewhere off the low of that channel, because oftentimes the underbelly of that trading range can be used as resistance. So you don't want to be buying it as it's going higher. All right, that's kind of rule number 1 as it goes higher here, right? You don't want to buy it as it goes higher, because we may end up running into this underbelly, and the bears may try to short this thing back down again. So you want to make sure you're waiting for those bears to get in, right, and then use their stops, right, as fuel to punch this thing back up into that trading range. Okay, one other variation that you want to be aware of would be a V bottom. So if we were to go lower and then pop right back up and begin to grind and grind and grind, these are pretty easy. Now, keep in mind, right, I would love to go lower, trap the bears in and go back up, but we may not get it. You know, there's a lot of support down there in an overall bull market. At this point, mark the trend line off the high, right? Find that channel off the low. See where I'm going with this? Then look left, find prior swings. Okay, swings are where the money is made. Okay, right below those prior swings. Now, I'm keeping this pretty simple right now. I'm going to go into a lot more detail about this stuff in the free trading course, right? You can pretty much look for any of the entry patterns, either a trap pattern, like I'm showing you right here, or maybe we get below the moving average. Bears come in, try to get short. We can buy into their stops. One of my favorite trades is a failure pattern, right? Trapping the sellers below that 21 moving average and then trying to make that run, right, back up into that trading range. All right. There are a couple other variations if we go down here, but let's keep the video relatively short. We'll cover some more variation potential tomorrow morning in our trade room. I do want to talk about, though, if the market goes higher. Okay, if we go higher here. Now, it's very, very important that we understand where we are. Okay, we are at the low of a trading range. So if we end up going higher, where does the market want to go? It's going to want to rotate back and forth, right? Back and forth from the bottom to the top, the bottom to the top. Okay, so we have to be aware of this. If we end up going higher here, we know where the market wants to go, right? It wants to go back up into these areas up overhead. Now, like I mentioned earlier, there's a nice channel coming down here. We've got, I think you'll probably see quite a few bears up here looking for a short, but I mean, what do I know, right? Nobody knows what tomorrow will bring, right? And the market sentiment these days, it seems like it changes like the weather, right? So let's make sure as we go higher, how would I sell this? I like the idea of that short. I think it's a little bit too early to be a buyer at that point. How do you sell it? What's the concern? The concern is we're at the bottom of this range. And so we have to anticipate now the buyers could come in and really try to run this thing back higher again. Okay, now, great spot for a short. We got resistance. We've got resistance. I like the idea of the short because the range, of course, is a magnet, but we have to give the buyers the benefit of the doubt. Okay, what do I mean by that? Let them try a couple times. Right? Show us buyers. I'm not a big fan of picking tops and bottoms, right? I talked about earlier how if we go lower, it can be difficult to kind of figure out where that bottom is. Same thing right here, right? So let's get the buyers coming in. Show me you want it, right? Give me a couple tries here, buyers. And if I see these buyers begin to struggle, now I know exactly where their stops are. Or as my first trading coach, my first mentor, like a gajillion years ago, right? He would always say, think about their pain, right? Put yourself in the shoes of the buyers and sell into their pain. Guys, we say this all the time in our trade room. The easiest money you're ever going to make in trading is when you've got, in this case, buyers stuck long into resistance with a range below you. Okay, a failure pattern to go back down into that trading range. That makes sense, right? I don't want to try to get too aggressive shorting this, okay? Because again, it may easily roll back higher, up into that, to the high of that trading range. So instead, let the buyers show us what they're doing. Now, some variations of this, everything has a variation, right? I got my favorites, but everything has a variation. If we were to run up, right, and start to collapse back down, this is where traps must be necessary, okay? So if we were to run up, right, into some overhead resistance, and then all of a sudden we pull back, the buyers try once, and we start to run going lower, okay? What's going to happen is that little voice in your head is going to be screaming at you. Get in, you're missing it, all right? I know this because I made this mistake way too many times when I was doing this stuff. So the trick is, if it goes up and V-tops like that, okay, oftentimes it'll go up, they'll try shallow, they'll race going lower. The key is, remember, you don't want to sell low, right? We're not selling low. Don't sell low. Sell as high as we can. And to do that, we're going to short, right, that again, it'd be a bull trap, right? It'd be a trap set up above that high. That way, my risk is here, my reward is right there, right? It's all about finding good risk reward, right? If I sell down here, now my risk is way like that. My reward is like this. It's lopsided, right? Traps are going to be your bread and butter, right? To make sure you're not taking those lopsided trades. And then last but not least, how do we know? How do we know when it's time to be a buyer if we go higher? How do we know? The trick is how we react to the 21 moving average. So for example, if we pull back, we run into that high, we then pull back to the moving average, but we don't struggle, right? We don't struggle and then go lower, right? We hold that pullback and we jump. Okay, we call these 1, 2, 3 moves. This would be a 1, 2, 3, reversal, right? 1, 2, 3, reversal. Now, if I see these buyers, if they jump off that moving average, now we know where they're trying to go, right? Now we know where the next objective is. Now, I get it. I'd love to buy that first pullback, but we can't do that. That's not a high probability trade, right? It's a much higher probability trade if we wait for that 1, 2 jump off the moving average and then find that high. And what I usually do is take that trend line, bring it down to these big lows and put it right down there, okay? Then look left and find prior swings. And that's usually where the money is made, right there, right? Now, again, I'm keeping it simple right now. I can't go into all the entry tactics here in this video, but a bear trap, a seller failure pattern, a pullback combination, a strength move. I got a lot of emails last week from you guys trading strength moves you learned in the free trading course. Great job, right? So be aware of that. We know where the market wants to go at that point. One more variation. If we end up popping and grinding, right? Popping and grinding. Every once in a while, right? We'll get these big reversals like this. If it pops up and begins to grind, what do you do in those grind scenarios? These are pretty easy, aren't they? We go out, we draw a trend line off the highs, right? We bring it down off that low, nice and tight, right? And we look for the entry, again, right? Below prior swings, off the low of that channel. The grind is the giveaway. Okay, the grind is the giveaway. We may not pull back to the 21 moving average, but once we end up kind of popping up, right? Popping up and then grinding higher, trust me, the grind is the giveaway. The grind basically tells you the bears are walking away, and we're at that point trying to go back up and retest the high. All right, guys? So ranges act like magnets. I hope I made it clear. My favorite trades for tomorrow here on the S&P. Let's keep going. How about some Nasdaq? Nasdaq is a little bit more, well, let's say bearish, first of all, right? You can easily see Nasdaq is going to be quite, well, not quite a different game plan, but definitely different, right? Definitely different. Nasdaq here right now, or the QQQs, let's zoom out here for a moment, and let's think about what's going on in the 60-minute. All right, we talked about this kind of bull range in last night's video. We are ultimately bullish into a trading range with a very strong correction, right? A very strong correction. Whenever we see a strong move in one direction, we have to respect that momentum and expect a pullback, a retest of that low before we end up finding our way back up into that trading range. So think of this Nasdaq right now as a bull market with a real sharp correction. Anytime we see a sharp correction, we have to respect those sellers. We anticipate another leg, potentially to retest the low. Really, ultimately, we want to anticipate sellers are probably going to be looking for ways to get short here. I think buyers can definitely make some money both in picking that bottom with maybe a crown reversal pattern. We'll talk about that in a moment. And you know me, I love me some double bottoms, right? We oftentimes see strong moves down, they double bottom and then back up, right? So I like the idea of a double bottom there as well. I wouldn't be surprised if we end up below this 14,248 tomorrow morning at some point. All right. This is if you're an intermediate member, if you're taking my video classes right now, this is what you call a spike in channel, right? So it spikes up into a channel. The base of that channel is oftentimes where markets want to come back to, just to basically buy low. So that 14,248 level here on the NQ, I would imagine is a very, very big objective right now for the bears. But again, we're an overall bull market. So the odds are pretty good that once they reach their objective, we find our way with that retest back up into that trading range, acting as a magnet there above. All right, guys? So we have to respect the bears right now. But at the same time, though, we're definitely looking for some long trades here as well. Okay? So think about it this way. Here's kind of the dance that you want to be thinking about in these types of situations. We are anticipating a pullback. On that pullback, we could definitely look for what's called a crown reversal. Now, whenever we have this much momentum going lower, we have to understand that as the market goes higher, there will probably be bears coming in, right, to try to short this thing and retest that low. Remember, anytime we see a strong move in one direction, we expect to pull back and a retest. Okay? So if I want to be a buyer off this low, I cannot buy high. Okay? That's the one rule. If you're trying to pick a bottom, don't buy as it's going higher. Okay? You can't buy as it goes higher because you're walking into a bull trap in that scenario. This is exactly why crown reversals are great for reversals. So if I'm trying to buy the low here right now, and again, you can see that little 69 level down there, 48 level down there, we could easily end up going lower here overnight. Now, bears have all of the momentum. So just like on the S&P, I want to give the sellers the benefit of the doubt. But in this scenario, it's so bearish that I have to make sure I buy as low as I can. This is where a two-try failure, but we call these crown reversals. And it's kind of a funny name for it, but it's basically a two-try failure with a bear trap on it. Okay? So think about that as the way to pick this bottom. Now make sure you pay attention. This is a very specific setup. Okay? First of all, we have to get higher highs in price. Why higher highs? Because sellers want to sell high. Okay, so you have to trap in those bears. Right? As it pulls back once, get the bears in. As it goes back twice, higher high, get more bears in. Now, why do we need more bears? Because we need more pain. We need more juice, right? We need more fuel to fuel this thing going higher. Remember, we don't have momentum on our side in this example. So we need all the help we can get to poke this thing, right, going higher. So we need the bears trapped in. But again, unlike the S&P, where the S&P is still pretty much overall bullish right now, we have to make sure also we buy as low as we can, right? And of course, to do that, you do that with a bear trap. And again, the reason why is because if we buy way up here as we're going higher, there's a very good chance we take out resistance, we take out lots of areas of resistance overhead. The buyers get trapped in and we dump back down again. Why? Because again, it's such a strong move down. Okay? Now, how would you sell that, right? What is the best way for us to short up here? Well, the trick here is trap the buyers in. Right? Think about that bull trap I just talked about. So as we go higher now the buyers come in, they're thinking we're going back into that trading range. Chances are it's possible, but when you get this much momentum, you have to be assuming that pullback will be sold. Okay? And as I mentioned earlier, my kind of goal is not to pick tops. I'd much rather wait for these buyers to come out, let them try to get long, and then look for one of those, what I call a failure into pullback combinations in that free trading course, right? Part of the price action cycle, right? So trap the buyers in. Again, remember, into resistance, right? Overall, again, bear market short term, trap the buyers in, use their stops as fuel, and then if we're lucky, grab that pullback combo. Where's the target? Back down to retest those lows. Okay? Now, I mentioned earlier that double bottoms are very, very common. Okay, so on the 60-minute, right, go back and look. We make that strong run down. They basically double bottom, and then we go back up, right? So the double bottom here is very, very attractive, right? Or somewhere around that double bottom, right? It may not be exactly a double bottom. Okay, so how do we trade double bottom? So if we understand the idea before, right, if we look for that crown reversal going higher, if we get back above the moving average, trap the buyers in and short this thing back down again, targets are back at that low. Now think about it. All the professional sellers, they're selling high. Okay, where do you think they're taking their profit? They'll take their profit at the low. So while the professionals are getting out of positions, in come the rookies, right? They didn't have the confidence to sell as the market goes higher. And guys, if you haven't learned this yet, it's so much easier to make money consistently if you're selling as the market goes higher and buying as the market goes lower, right? Buying as it goes lower, selling as it goes higher. We do not want to be selling it as it goes lower. And I realize it's instinct. It's one of the reasons why, as human beings, we're not wired to be very good traders. So in come the rookies now. Trap those bears in, right? These are rookies down. These are not professionals, right? Rookie traders, small stops, tight stops, bad psychology, right? And use their stops to fuel that reversal going higher. Now, where do you think the market wants to go? Take a guess. Just guess. It'll want to go to the highest part of that pullback, right? That's where our half off target goes. We leave a runner because, again, it's an overall bull market. Leave a runner from there, all right? So this dance, right? That dance is really what you want to kind of get used to or get familiar with when you have an overall bull market, but, again, a very sharp correction like we're seeing right now. And, remember too, if we were to get up into this area, if the buyers were to hold that pullback, right, and jump, be careful though, because you've got the underbelly right here, right? Remember this area right here? This was a big range we had earlier this week. This area right there is a big area of resistance, right? So getting that pop off the bottom, that short back down again, just make sure we clear this area, right? Make sure this area right up in there, if we're gonna get a reversal, right, it'll pop up, it'll pull back to that 21 moving average, and it will convincingly break above that area. All right, be very careful getting caught, trapped in around that area there. But again, if we get back above the moving average, right? Back to the moving average, we hold the pullback, we don't struggle and fail back down again. If they jump convincingly well through the underbelly of that previous range, okay, now it's on. Mark that new high, mark that new low, go drill down, find those prior swings, and don't miss the low of that new channel. What do I always say, right? First test, right, is the best test, right? The first test off the low of that channel. All right, making sense out there? Okay, so keep an eye on that, again, as we go higher. Make sure they really give us proof, because in these situations, most of the time, we're going to go up and right back down again. All right, guys? Like I said earlier, we can play both sides of this, but we have to be smart about it, right? Be smart about it. All right, how about some crude oil? I know I'm late in the video right now, so I'll try to do my best to keep this short and sweet. Luckily, the game plan is pretty simple here on oil. Let's take a look at the 60-minute chart here on oil. And first thing you'll notice is we're back inside that trading range, and we're basically rotating off the low of that trading range. All right. So here's a big old range, right? Big old range. Ranges, of course, act like magnets. We talked about this earlier in the week. We projected the move off the high down to that low, and now we're trying to rotate back higher here. Okay. To do that, and again, basically looking for that rotation back up and then back down again. When it comes to ranges, just so you know, okay, when it comes to ranges, think about where the edges are. Okay, this is really the easiest way to think about ranges. Think about where the edges are, buy low and sell high. Okay, so as we go up, selling back down, right? As we go down, we're buying back up. The range acts like a magnet. Okay. So as we're going higher here, I think there's money to be made going higher, right, to be a buyer here. But once we get up around these highs, though, then we're looking for the short back down again, right? If we go lower, very difficult to short that mark going lower, but great place to be a buyer off of that low. So this range is the magnet. We're basically trading that rotation back and forth. It's simple idea, but not always easy, right? Not always easy. So back to my tick chart. Again, I think everything's easier on tick charts. And you'll notice right now, we've kind of got this, there's that range, right? We're projecting the amount below, the amount above, and we're trying to complete that rotation going higher, all right? Now, oil is a wild animal right now, very much being tossed around by the latest development out of Ukraine. So anything is possible on this. But right now, I think what my favorite trades right now would be bear traps, right, below these lows, right, bear traps, below lows. And ultimately, as we go higher, I think bear traps going higher here as well. Now, remember that two-try failure we talked about a moment ago, right? So if we end up going lower, what's the best way to kind of find a bottom on this? Don't pick a bottom, right? Wait for it to pull back to the moving average. Look for the bears to try a couple times, use their stops as fuel, and run back up into the range. It looks a lot like this one, right? And of course, we're going to go, we'll drill down to a faster time frame tomorrow morning in the trade room, right? But as they go lower, think about once, twice, pack up, right? And back up we go. So below the trading range, we're looking for basically seller failure patterns, all right? If we were to V bottom off of that low, what do you do if it V bottoms? If it V bottoms, we look for traps, right? Literally trap setups, right? Trapping in traders below prior swings if we V bottom. So just make sure you don't get caught selling, right, at the lows of this trading range. That's kind of my favorite place to do it. If we end up going higher here, okay, if you're going higher here, you can see that trend line coming up off of that low. I've got one leg, two leg, possible three legs going higher there. What would be my concern right now? If I bought this shallow pullback, what do you think is my concern? My concern is I'm buying, well, basically you're trading right inside that trading range, right? So the idea is we may easily roll lower here and keep rotating back and forth. So this is exactly where one of those crown reversal patterns comes in handy. In the short term here, looking to buy as low as I can and get that high right there. So a bear trap or a crown reversal pattern, right? A bit of a different way to look at a crown reversal pattern in that one, right? So crown reversal pattern, it's basically a two-try failure with that trap setup. If we end up going higher here, definitely bear traps going higher because I don't want to buy very high, right? As we start going higher, we know where the market wants to go next. And as we talked about kind of repeatedly last night, always, whenever you're worried about buying too high, that trap setup. Remember, strong move, shallow pullback, higher high in price, traps, baby, right up there. And then as we get up higher here, now we're into some resistance above the range now, right? Now what do? We don't pick the top. We let the buyers try a couple times. At this point, it's very bullish, right? So don't pick the top, let those buyers commit, and then drop that order in and sell right in the stops back down into that trading range. Again, think about the edges, right? Think about where the major edges are. Avoid the middle if you can. Wait for the breakdown, pop back up. Wait for the breakout, right? Sort back down, right? Buy low, sell high. Don't do the opposite, right? Don't do the opposite. Don't buy high and sell low. It's so easy, right? Yeah, it's a little more difficult when you're doing it in real time. I get it. It's simple, but not always easy, especially when there's money on the line, risk involved. But you know what? That's why our trade room is here. You know, remember tonight we're game planning right now, but tomorrow morning we're going to trade all this stuff together tomorrow morning. I would love to have you there trading right along with us. If you're looking for a place to come out and learn and trade along, you'll love my trade room. Now, I'll put all the important links, so the free course links, the trade room membership links. I'll put everything you need down there in the description of the video. Grab those links and get joined up, and I'll see you tomorrow morning at the opening bell in the morning trade room. If you have any questions, if you need help with anything we talked about tonight, the easiest way to get help is simply to call the office. I'm always here standing by. We got live chat as well, so we're here to help out if you want help along the way. All right, guys, that's all for me tonight. Hope you learned a lot here tonight in the video. Thank you so much for watching all the way to the end. I'll tell you, if you are this committed to watching this video here tonight, I can only imagine how well you'll do with us when you're actually a full-fledged student, a full member of our morning trade room. So well done all the way to the end of this tonight. Now get out of here. Enjoy the game tonight. Game 3. Can't wait for the game 3 tonight. And I'll see you tomorrow morning, 8 o'clock Eastern time. If not tomorrow, we're going to come back tomorrow night and we'll get ready for a very important Friday trading session. All right? Keep in touch. Don't be a stranger. I am here to help if you need me. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye-bye for now.